Hello, my name is Chris Skinner. I'm a author and speaker and troublemaker, as well as a blogger at thefinancer.com every single day for over 12 years. And recently, George Revich and I were speaking with each other. We've known each other for many years in different parts of the industry across payments and consulting and banking, and decided that it was a good moment right now to look at the state of the industry, um, from what the industry thinks is happening around the coronavirus pandemic, and started a survey in May 2020 to do a quantitative view of what was happening through the audience of the Financial Services Club and the Financer, which is mainly people in payments, banking, consulting, and all other parts of the financial industries, technology companies and others. So, and particularly fintech. And we've got a good result, actually. We've got a good spread, mostly in about half from Europe, but a good number in the USA, 15%, and then rest of the world. And the results prove to be something that are quite illuminating, which, George, I'll let you hand over and talk through. The main headline is you take out of this.
Sure. Okay. Thank you very much, Chris. We looked at six different areas, and so let me go through those highlights right now. First, in crisis management preparedness, about three-quarters of the respondents said that their crisis management plans were good, and in fact, they were very well prepared for the COVID crisis. The Europeans were significantly more positive about those results than others in other regions. Very interesting finding. 40% of the Americans we surveyed said that they were unprepared for the handling the government programs that ran through their banks. And that's double the global average and almost 4 times the results from the European respondents. Very interesting. Chris, you have a comment on that?
Yeah, I mean, I can only talk really from my own experiences and observations of what's been happening. But when the CARES Act came into the USA, I think a lot of the banks didn't know what to do with it, and that was their challenge. And it was unclear about direction and risk and credit profile and who was backing what. And we had the same thing in the UK, in that the UK government issued a thing called the Coronavirus Business Interruption Loan Scheme, and they would take 80% of the risk on the government. And the banks just said, well, we're not going to do any of this without due diligence of exposure and risk, and didn't distribute the loans. And small businesses in particular were desperate. So the UK government came up with another scheme called the Bounce Back Loan Scheme, and that had to be delivered within 24 hours of application because the government was taking 100% of the risk. Even then, the banks had a little struggle because they had to get the systems in place quickly. But surprisingly, they did move very quickly, and those bounce back loans were distributed really quickly because now the banks had no risk.
Okay. Okay, so moving on, the next area we asked was about the effects on their current operations. 42% of the bankers said that the crisis had a positive effect on the market fit for their products. Interesting. Not surprising, though, 60% of the fintech respondents said that the crisis was a positive on their products, and consultants had similar results. On reaching their KPIs, most everybody said that the crisis has been a negative for the entire organization, with sales and marketing taking the biggest hit. But interestingly, the IT and technology departments were seen to be a positive. And this is probably because they were the ones that had to prepare everybody for work from home. And on work from home, on that topic, 83% said that their companies were prepared for work from home, and 82% said that they plan on supporting work from home going forward. Interestingly, 81% of the FIs said that they were that this was going to affect the long-term needs for office space. Chris, what do you think about that?
Well, there's been a lot of hesitancy amongst banks to allow key workers, particularly key workers with customers, to deal with customers from home because of security and risk considerations. And that's actually been the major barrier to banks moving to cloud. And the key thing that's happened in this crisis is 2030 has been delivered in 2020. A lot of banks that were prevaricating about cloud systems and particularly critical processes in cloud, like those that use customer data, have very rapidly taken things they were thinking about for 3, 4, or 5 years and moved them forward as quickly as they could. And the idea of an office becomes a little bit strange because when you've had so many people working from home for so long, effectively and actually productively, in some cases more productively than in an office, then you have to question what an office is for. Jez Staley, the CEO of Barclays Bank, recently said the idea of cramming 7,000 people into a single building is over. Now, not everyone agrees with that. I saw that Citibank came out and they don't agree with that view. You have to have some face-to-face, you have to have relationships. So there'll be a new normal balance of home and office, but it'd definitely be far more at home than ever before.
Okay, thanks for that. Okay, moving on. Relationships with constituencies was the next area we probed. Overall, most said that the crisis had a positive impact on their customer relationships. Among the FIs, 51% said that the crisis had a positive influence, which is really, really interesting. About half the FIs think that there will be a small amount of account switching, which was a much bigger proportion than the people who thought that there would be a large amount of switching. Only about a third said that they felt that there'd be a large amount of switching to new banks because of the crisis. Overall, 60% said that the crisis has been a positive on employee relationships. Chris, what do you think?
Well, when the crisis hit, there were those that were ready and those that were not. And a lot of the traditional financial institutions were not, because they didn't have work from home policies and physical office backups. In fact, the main physical office backup was another physical office. It wasn't working from home. And that became abundantly clear for me because I deal with a UK bank that had a call center operation for customer service in India, and India shut down at 4 hours notice. Everyone in the bank was locked down at home and they hadn't got a UK call center. I mean, they were getting 10, 20 times, 100 times the volume of customer calls, and they couldn't deal with them. I actually haven't spoken to that bank for 4 months because I can't be bothered waiting on the phone for 2 hours to get through to someone who can't answer my question. So I ended up opening a challenger bank account. We've got a number of neobanks, challenger banks across Europe. And the one I chose, I got the account opened using an app within 10 minutes. And although there won't be major switching that they're seeing today, when we unlock down, when the customer can switch and they feel confident to do that because of the terrible service they've received for the banks that weren't ready for the crisis, I think you're going to see a massive movement.
Interesting. Okay. Well, on that note, we asked about the future. 56% said that they thought that there would be changes to the many changes to the financial services industry, and about a quarter believe that there'll be dramatic changes that are on their way. Only a small percentage, 20%, said that there'd be little change going forward. So clearly, people see that this crisis will create some long-term changes. And lastly, we asked about their state of mind. What's their mood? 75% said that they were either optimistic or trying to be positive, which is good to hear. Only a very small minority said that they were either fed up or depressed. So the industry is positive with a lot of positive results that we found. Chris, any final comments?
Yeah, I mean, first of all, I've got to say thank you to Salesforce and Appian for supporting this research, great partners. But to the future, I'm doing a number of online workshops in Zoom, Teams, Hangouts, you name it, I'm doing it, with banks during this crisis. And I normally end and say, looking to the future, is this a V-shaped recession, a U-shaped recession, a W-shaped recession, or a never-ending recession? And you've got to have scenarios and plans around those different quadrants. And the key is, if you think that this pandemic issue will go away by Christmas, like some political leaders do, I think they're a bit delusional. This is going to be something that's going to be around for at least a couple of years. And the airline industry is predicting it won't go back to normal till 2023, maybe even longer. So if we've got 3, 4, 5 years of major issues with physical operations, you've rapidly got to move to digital transformation. And to do that, the best way is to read my new book, Doing Digital. And I had to make a shameless plug there, didn't I, George?
It was a good idea. All right. Well, thanks very much for the collaboration, Chris. Appreciate it.
And yours. Take care.
Bye-bye.